Welcome to Stockwatch with me, Ray White. Well, joining me to unpack your stock-related questions today are Alex Duys from Umthombo Wealth and also David Shapiro from Sasfin Wealth. Now, be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch, of course. Gentlemen, good to have you both with us. It's been a quieter Monday today, I must admit. But of course, we've got our commodity prices. We've got the mining indaba. David, I'm going to start with you. The mining indaba, it's a new year. It's a bit of a twist this time around because, of course, we've got these beautiful commodity prices. What are you expecting? Are you watching it? What's your take?
I don't know. Look, there's always a big party. I mean, it attracts a huge amount of people coming from overseas, and I think they love the Cape. And I think the people who really benefit are the restaurants and the pubs and everybody down there. But of course, it does give a platform for our mining giants to say something. We normally get the Minister of Mines, whoever that is at the moment, giving a talk. Ray, the big thing is that I think that we watch for is if there's any change in our policy, any change in government stand towards mining, attracting foreigners into the country. We've said it before, but nothing really happens. We just kind of bumble along. But just quickly, I know that I don't want to take too much time. When we start to look at the numbers that are coming out, and today it was DRD and certainly Northern, and we've had Impala as well. I mean, there's huge amounts of money. Debt's been driven down. There's plenty to invest. I just hope that we create the environment that we can see expansion.
Yeah, you see, that's a big thing. Yeah. I see what you're saying. I mean, Alex, if you want to join in on that as well, there are huge, David's right, there are huge amounts of cash going around. A time to put your money there? Have you missed the boat, perhaps?
I concur there with David. So obviously the companies in South Africa, that specifically in PGMs and gold, are doing quite well now. But I think from a mining indaba perspective, it's unlikely that we're going to get announcements that the red tape is going to be reduced and that South Africa will become a much a more favorable jurisdiction for investment. I think that's what we really need. If that does happen, or we're on a path towards that, then obviously a huge amount of money can be flowing to South Africa. But I won't be holding my breath up for that. But certainly we will get some nice insights from all over the world and what outlook are on certain commodity prices and so forth. And hopefully, we'll get a better picture of what short to medium term holds.
Yeah, just don't touch those regulations. That's all. I mean, Dave,
happening. I mean, sorry to it's as Alex says at the moment. I'm not. No one's holding their breath here. But when you look at the Glencore Rio deal falling apart, there's a lot of activity. Hopefully, both parties will be there. I never thought it was going to take place simply because there are too many egos around for this to have succeeded. But it's a very active area at the moment. The search for copper and everything. So I'm not down there. I'm here in Joey's in Joburg, sitting on Corley Drive. But hopefully, things do come out there that are going to give us guidance. But let's see. Yeah.
Speaking of Glencore, and I'll stay with you, David. Speaking of Glencore, I mean, you're right. It was all about egos, and it was one CEO versus the other, and it didn't work out. What happens with Glencore now, if anything? I mean, they were looking for some sort of new opportunity.
I think they can. Look, they're all expansion-minded, and they all want to cut down the costs. Mining is an enormous costly experience. It's putting out the infrastructure, trying to get assets. You find a mine, you find an ore body. It takes years for you to develop it and to get returns on it. So the easiest thing is to merge, consolidate, and get the profits rolling and so on. It just gives you a lot more flexibility. But we've seen Anglo and Teck now moving to Vancouver. So from Glencore, they'll carry on. They'll just bumble along, probably adding on investments along the way and that. But they've been after this for a long time. But
Yeah.
it's, when you know the characters involved, when you know that you knew this was never going to make any headway. This wasn't going to go anywhere. It was nice to have tea together around a table, but that's about as far as it was going to go.
Such a pity. Alex, your take on this as well? I mean, I must admit, when I first saw the article, I thought, sure, this is going to be something big. And I was a little bit, I don't know, I think naive is the word, to think it was going to happen. Alex, what were you thinking?
I mean, if commodity prices remain strong over the, call it 6 to 18 months, then corporate action cannot be ruled out. So we'll have to keep monitoring that. It might obviously not come from a retenders perspective, but from somewhere else. I think in the meantime, Glencore will continue to look to clean up their portfolio a little bit. So we saw the announcement of the copper assets in the DRC last week. That, for example, does de-risk some of the risks there. They do have a sizable metallurgical and thermal coal portfolio. Prices to pick up data will give them some additional bargaining power. And of course, that can also use that then as a lever when you do corporate deals. You can then bump that asset along with something else, and then you can just list the copper. So there's a lot of options still available. We know that even Glassenberg has got a big chunk there, and he would like to monetize that over some stage in the future. So I wouldn't dismiss it. But in the meantime, I think the fundamentals are looking good for Glencore now. Will probably generate very good returns, cash flows, and perhaps even dividends for shareholders in the short term.
Yeah. All right, let's park them at the moment. We'll get into our questions now, but one of the biggest questions is something, David, something you said. You're investing in cash. Cash is king at the moment. I think it's something you said.
Yeah.
Are you still standing there? Because a lot of people have responded to that.
That was so last week. You know what? Just to digress, or to explain that, the volatility that we saw last week was so intense that we never knew where it was going. And suddenly, by Friday, everything's turned around. And even today, things are stabilizing. So it's very hard to try and understand where this volatility is coming from. I know there was a piece out from Goldman this morning who said, brace yourself, fasten your seatbelts. It's going to characterize the markets. Maybe, I don't know whether the period was given in the next few weeks, but we're seeing that, we're seeing it in the commodity prices, gold's back above 5,000. So I was encouraged by last week. So I'm going back into tech in a big way. I'll give you some, I'll let Alex speak for a second, but just give you, some of the reasons a bit later of what I did over the weekend. I'm an old man, so I'm boring. So I read all stuff that young people wouldn't read. But I think there's so much happening there that's going to be encouraging over the next 4 years.
All right,
so I'm back in a big way, yeah.
Let me bounce it to Alex then. What are you looking at the moment? If you're not looking at cash, are you with David on tech? What's catching your attention at the moment? We'll go into some of the questions now.
Look, I think it's very difficult to try to time the market where I think there will be a big sell-off. So to build cash or hold cash is not necessarily a great idea because opportunity costs, does eat into that. But saying that, to have some cash available when there are big sell-offs in the market is always nice to have, right? So be on the lookout for quality businesses because if it is a sell-off 10-15%, you can pick them up. And we have seen some big moves in the tech space. I mean, you've seen likes of Amazon down over 10% in a day. Microsoft was sold off aggressively about a week and a half ago. So it's nice to have cash opportunities like those. But I think with all the investment in the US and AI at the moment, interest rates are likely to come down as well and develop in emerging markets. It does seem for me still like, it's a risk-on environment, and as a result, you want to own assets as to sitting on the cash on the sidelines.
Interesting. All right, interesting stuff. David, I can't wait till later. You're going to have to tell us now. What were you looking at the weekend? I can't wait.
No, genuinely, I was up with all this talk about the money being spent and no returns being made. I started to read, and it's not easy. You've got to dig down. But I mean, if you look at Microsoft, Google, Amazon, Meta, they're going to be spending 650 billion. I think globally you're going to get 2 trillion odd being spent, on investments in AI. I mean, that's a huge amount. And where I'm getting excited about is that, hold on. This is money. This is investment. This is not money wasted. It creates, when you put up a data center, it's a construction, so you've got construction jobs, you've got all the electricity that goes in, you've got, you need to train engineers, you need to train scientists, and so on. You can get where I'm going. So this is a massive multiplier in an economy. Yes, I'm sure that some of the companies will not make returns and others will make excess returns. But I think from America's point of view, and China's the only other area that is doing this in a big way, I think down the line, 3-4 years, as this continues, it's going to be a huge driver of growth, in the economy, underlying economy. And I'm sure that they'll get you will get your return. So that's where I'm thinking. I'm saying when they've got the cash to do this, even if they borrow a little bit more, somewhere along the line, you're going to get returns on this, maybe not for the companies, but certainly in the economy.
Yeah. Alex, your thoughts? I mean, it's a lot of money going into Alphabet, a lot of money, Google. Great results, but all of a sudden, Alphabet, there's just money everywhere. What's your thoughts on AI? Are they going too fast, or is this the vision of the future? What are you saying?
When you look at generational trends, historically, people tend to overestimate it in the short term, but underestimate the potential over the long term. So I think obviously that's what creates perhaps short-term market bubbles and so forth. But there's no doubt, in my view, that if you take a medium to long-term viewpoint, that these AI investments is going to add a lot of value. And we simply cannot, at this moment, even imagine what the ramifications of that are going to be. So I think that's important to note. I mean, also saw from Atlanta Fed suggesting that Q4 economic growth numbers in the US is going to be a lot higher than perhaps consensus is looking for. Now, if that comes through, and then perhaps the benefits of AI is much more than we anticipate, because we could see possibility of US GDP and perhaps even China's GDP being reweighted upwards. And I don't think the market is pricing that in a moment. That will create a big opportunity if that does happen.
Yeah, you see, that's the whole thing. That's so important, and it's so interesting. So, David, I mean, where do you even start? I think that's the big thing. There's a few questions that go down that. Where do you even start?
I think the point is sometimes the media sensationalize issues like, about the amounts being spent and nothing happening. I think you've got to do your own research and reading and think through. This is real. This is not a fad, right? Yeah. And I think I've always maintained that this is going to be the year of AI adoption. More and more companies are going to adopt AI. So where do you start? I think don't be put off. Don't start going down and buying Procter and Gamble and Unilever and companies like that, even though they might present value. But I mean, and they're good businesses. I'm being a bit cynical here and a bit unfair, but I think the growth, if you're looking for growth, it's still going to come from the areas that we're identifying, the whole chain, from chips, from the hyperscalers and so on.
Sure.
So start at A. That's Alphabet.
Yes.
Okay. Apple and Amazon. And we'll go to biggest Broadcom.
We could do this all day. We really could.
I know.
Gentlemen, let's get into our questions now. Quite a few emails have come in. Clive Demont wants to know, can you comment on Orion Mining? Alex, I'll start with you. Orion Mining, they've been in the news. What are your thoughts?
Yeah, unfortunately, I don't follow this company closely. Saw an announcement today that they've raised $250 million with Glencore being involved, but I can't give an informed view. I put my merits of the project out there in Prisca and so forth, so sorry about that.
Yeah, no, that's fair enough. That's fair enough. David?
It's the old Prisca. Look, they're doing far better than they were last year with the copper prices going up. But I think you've got to understand that this is an operation that's been, these mines, both Prisca and O'Keefe, which is, I think, Copper 360, Alex, I'm not sure which one is which. But Ray, you'd know those old names, Pritzker and O'Keefe.
Oh yeah,
So I think they've never been the most promising of areas, but hopefully with copper at these levels going up to highs, they are able to extract value. And Orion's still a very small company in that, but I must say the share price is going up. And I run this competition, the Crystal Challenge, and I can see that there's a lot of focus on Orion. It's one of the favorites, so. And to add another thing, I chose Copper 360 last year in my choice, and it was the worst performing share in the whole competition.
Oh gosh.
This year it's much better, yeah.
Your crystal ball's not working so well.
No. It was a year out.
All right, another one. 2 emails have come in, one from Imtiaz, the other from KG. How do you see Pick n Pay over the next 6 months? Pick n Pay has been battling. I mean, Alex, this has been something that we've all seen with Pick n Pay. We've seen Checkers 60-60, Woolies Dash, and Pick n Pay, they've come in for a bit of a pummeling. We all know that. But what happens next? What are you seeing at the moment?
Yeah, so they've got a February end, so we should get an update somewhere in March or April on the business. Look, I mean, I think Pick n Pay, at least the debt issues are now out of the way, so that enables them to invest accordingly in the business. Something they've not been able to do for pretty much a decade or more. Try to revamp stores, try to fix some of the issues they have with logistics and so forth. But I think for Pick n Pay to compete, they'll have to get smaller.
Yeah.
So that's why they've been closing stores, loss-making and so forth. And then slowly but surely trying to regain market share over time if these stores are successful. However, with the lower stores, it obviously means you've got less bargaining power of suppliers, and that perhaps you don't get the full benefit of your DCs and so forth. So it's a very, very difficult one. And on top of it, we've got food inflation pretty much very low, perhaps even negative. And that makes it very difficult to grow top line. And since Pick n Pay has to invest a lot in the cost base, getting new skills in and so forth, I don't think there's a good chance that the operational results won't be as great. But you have to take a 2 to 3 year view here, and obviously going to get updates on a 6 monthly basis to get a sense of they're making progress or not. Pick n Pay as a valuation looks quite attractive, but I would say of high risk. For someone that's more of a buy and hold investor, it probably makes sense to rather buy a Shoprite or Boxer, and those are a bit more active could have a look at Pick n Pay, because you might have to move quickly if the situation turns sour.
Yeah, interesting. David, you were nodding your head there.
I am. I got to ask Alex a question, because he's probably got all the information in front of him. But what is the value, because I think Pick n Pay's got a market cap of about 16 billion versus Boxer's 32 billion. But Pick n Pay still holds a lot of Boxer. So I don't know what the see-through is of Pick n Pay's Boxer. You might be getting the whole operation for nothing, which it appears. I don't know if Alex can answer that. I'm not quick enough to look all of those things up. But I think, Alex mentioned it. I think Boxer is probably doing better than this. It's going to take a long time for Pick n Pay to actually right size and take on the competition, where you've got a steaming Shoprite, and you've even got Woolworths Food, doing very well. Spar trying to recover as well. And you've got, of course, we've got Walmart out there, which we don't account for. All of which are giving Pick n Pay a bit of a run or big competition.
Yeah.
But there might be value in that, Boxer's value in Pick n Pay. But I've got to look it up.
Right, Alex, your thoughts on Boxer?
Yes, so I mean, if you assume no discount, yes, then the Pick n Pay is negative value in the Pick n Pay valuation. If you put a 20% discount to that because they don't own 100% of the share anymore, holding company discount, then it's pretty much close to zero odd value. So I think, it tells you they're pretty much getting Pick n Pay for free from that perspective. But of course, if they are continuing to bleed cash, then the valuation, of course, can be negative. The negative free cash flow. So that's some things you have to think about. But there's no doubt there's high upside risk in Pick n Pay if they can execute.
Yeah.
Very high beta play. So that's why I said earlier, it's not for those that just simply want to buy and hold. It's perhaps though for those want to be more active, and so they can do exit or make adjustments if necessary if the situation changes.
Yeah, that's interesting. Imtiaz also saying he wants to leave Pick n Pay. He's looking at the super group. I don't know. I suppose it is a sure bet. Dave, you got this look on your face at the moment going,
I'm trying to gather my thoughts on Supergroup. It's a logistic company, and I think it's changed character so much over the last couple of years that I'm a little out of touch with where they are. I know they were in Australia, but I think they sold that part of it. So I'm really lost the focus on that particular company.
no, fair enough. Alex, you want to
Give
add
us
to
a
it?
warning before, you should give us a warning. Say,
Yeah.
okay, these are the questions, then we can sound a lot cleverer.
That is fair enough. That is fair enough. All right, let's park Supergroup. Here's one that you guys will know. Jim wanted to know Naspers Prosus. Still a strong investment. They're selling their non-core assets. In fact, that's a big story today. They're getting rid of some of their non-core assets. Alex, I'll throw this one at you.
Yeah, so I think we like Naspers Prosus at the moment. So if you look at the valuation, 10% is trading quite below its 12-month high as well as its all-time highs. And at the same time, they are doing quite well in the AI race. So if China tech still looking relatively attractive for that. Then within Naspers Prosus, the discounts are quite wide at the moment. And we saw from the Prosus CEO later that they'll continue with the share buybacks. They're not going to do any more M&A, which is a positive. And they're already gaining some value out of the e-commerce portfolio as well as the other assets they have. I think this is a good entry point in our view for South African investors. Obviously, if you're global, you can look at more options, but for those who are just focusing on the JSE for limited options, we think Naspers Prosus is a good way to play at the moment, and it's giving you, in our view, a short-term opportunity.
Yeah, nice one. David?
No, I like them from the holding in Tencent, and I'm glad they're cleaning up a lot of the operations that they bought, which is just going to generate more cash, which will allow them to buy back more shares and that. But I buy it not for the scooter bikes or things that they deliver, food delivery and so on. I buy it for the underlying value and you're buying it in Tencent. I think that China's the only other area outside of the US that's really driving AI.
Yeah.
So, and the discounts there, the only thing that killed us is you forget the rand, the rand gets stronger on translation, it hurts us. So we would like a slightly weaker rand as well.
Yeah. David, are you worried about regulation in China? I mean, I go back a couple of months and there was that whole thing about 10 cents and there's a whole lot of, regulations coming and that was scary.
Yeah.
That really was scary.
I must be honest, even the way that they hold Tencent is a worry. It puts a question over whether they can actually equity account their holdings, because I don't think their tenure is that strong. It's done through a friend. We've got a friend there around the corner who holds him. He'll hold him on your behalf. It's that kind of holding. So it's not, I don't think they've got a share certificate that says to you, we hold these shares like in straight and everything. That bothers me. I don't think China will do anything at this stage to upset that. But I do question as an accountant whether you can actually equity account those earnings.
Gosh, that's interesting.
Which they do. Goes to the bottom, makes their earnings look very nice. And when they sell shares as well, get big capital profits. So, I mean, it does fluff up the income statement.
Worth taking the risk. No, it certainly is. Right, we're running out of time, so let's go through one or two more. I've got Tundi wanting to know, are there good returns, a quick way to make money on something like Satrix, when you have a Satrix 40? All right, Alex, I'm going to throw that at you.
Well, if you're buying indices, you have to have realistic expectations, right? So, yes, there could be years where you can make 20, 30, 40% on indices, but in general, trying to buy these to keep equity-like returns, which, if you take a long-term view, will probably be between CPI 5 to 8 or 9%.
Right.
So you should have realistic expectations of buying indices. This is not something that you're going to try to make a quick return on, but will most likely compound for you in real terms.
Yeah. Look, I mean, it's stable.
Yeah, that's the short and sweet of it.
Yeah, stable, but if you're looking at risk, it's something else. All right, gentlemen, stock pick. David, what is your stock pick for this lovely Monday?
Well, I started on A from Alphabet, but the one I want to go for is, I'll go down to M, to Microsoft. I think this has been overdone. It might continue weak for a bit. I think down the line, I think you're going to pick them up at a very attractive price, bearing in mind that, this is going to take a bit of time to get to get the returns. But I think all these AI companies are going to do very well from the investment they made. And I just like that Microsoft was sold down as hard as it was.
Yeah, I mean, you can see that bubble that's going down, but if you catch it just at the right time, David, you can make something.
Yeah, it's the right time.
Yeah, most well, there we go. From David's lips to yes. Right, Alex, your stock pick.
I'm going for Italtal. So you've seen a major recovery in South African bond market over the last 18 months, but it's not really been reflected yet in South African equity shares. So to give you an example, a business like Italtal, according to our calculations, their free cash flow is going to be between 15 and 20% for the next 3 years. So we think they can pay dividends of anything between 10 and 20% over the next 3 years because they've got a huge amount of excess capital. They're already in net cash position. They've already done all the investments they have done. And we think if there's an uptick in economic activity, they'll also have some growth as well. So you're buying it at multiples well below its historical means. This is a good company. If they were trading a better economy, the rating would have been much higher. But I think in the short to medium term, while you're waiting for this recovery, you're pretty much going to get double digits in dividends. So for us, it's a very good entry point at the moment.
Yeah. Alex, would you go for them over the long term as well? Because I've been watching Italtal and they sometimes up and down. Is this a long-term game or is it all of a sudden they're right where you want them to be?
Look, it's a high-quality business because they're very integrated. So you've got a manufacturing, you've got an import, you've got the actual stores. However, the economic growth, we haven't grown in 10 years, right? So as a result, people don't really spend the amount of money they would usually do on renovations and so forth. There are some risks I need to highlight. For example, there's big tile manufacturing capacity now in Mozambique, which is flooding our market for imports. So that's perhaps one of the reasons why the share price is trading low. But if you look at the margin, I mean, this is a business that generates net margins of about 20% for retail.
Yeah.
Very, very high. ROEs of about 20% while have a net cash position. So that tells you the metrics of this business, and of course, management, the owners there has been founders of the business as well. So we really like it, but patience is required. It's not something that will move first.
Yeah.
I mean, some of your Clixes and ShopRite, these are the type of stocks that will move first, and then later on, a business like Italtal will then catch a bit as well.
Yeah, great insight there. Gentlemen, that's all we got time for, I'm afraid. That's all for Stock Watch today. Thanks to our guests, Alex Duys from Umthombo Wealth and David Shapiro from Sasfin Wealth. Up next, the close.